Yeah, my name's Michael Moon. I'm a director of a company called Tax Assure. We help businesses that owe money to the ATO in terms of stopping legal recovery action, getting them payment terms that they can afford, and reducing their debt where we can. We have big wins almost every day. We help dozens of businesses every week, and we're in the business of helping people. And so our biggest win is when the guys stop somebody whose business might be about to go under, to get them out of trouble with the ATO and get them back in business. So yeah, we're very, very lucky. We get wins every day. Look, for us, I think the biggest issue is awareness of who we are. A lot of people say, we didn't know there was somebody out there doing that. We get a lot of work with accountants and finance brokers and lawyers and so forth sending us work. But the big thing for us is getting in front of the business owners themselves, because we see people who are incredibly stressed and have been stressed for a long time. And so the sooner we get to them, the better. So we love getting in front of business owners where we can.
This session is called, the shorthand, it's the fixes. These guys over here are the fixes. From stress to strategy. So this session will be about taking control of cash flow before it breaks. What most businesses get wrong about ATO debt and how to avoid costly mistakes. How to reduce ATO debt, not just defer. Why the wrong finance solution can make things worse. And what does work when cash is tight and pressure is rising. These three work with business owners every day to solve cash flow stress from three sides: accounting, finance, and tax debt. Accounting, tax debt, and finance. We'll get in the right order. There you go. Question one, I'm going to start with Sam. Tell me a bit about Murchison's, what your firm does working with and supporting business owners, and what makes you different to other accounting firms.
So we're a chartered accounting firm in North Sydney. We specialise in helping small, medium business owners predominantly. I'd say 90% of our client base is made up of business owners. We identified some time ago that there's a gap in what people need in a small business in terms of service and partnership from an accountant. And there's a significant lack of these small businesses having an advocate in business. So we aim to partner with businesses, not just do their accounting. The accounting process these days is relatively mundane. It's your year-end accounts, it's your BASs, it's your tax returns, etc. A lot of that's done through online software and the like. Our ability to rely on that as a business model is not there anymore, I believe. There's a lot of businesses need a lot more than that from their accountant, and they should demand a lot more than that from their accountant. So we do a lot of engagements with clients. Most of them we're catching up with monthly or at least quarterly to go through how their business is going, do some forecasting with them. There's always issues that come up throughout each month. Having someone have an objective view, look at their business and challenge them, I suppose. Why is this not the way it should be? What's happened to your margins? Why are your overheads blowing out? Having that person to come in, or that group of people to come into your business, our clients find quite valuable. And it sort of turns the compliance part of what we do into something that must be done. We obviously look for tax concessions and minimise tax wherever we can for clients, but at the end of the day, tax is just another expense item, and people are needing a lot more help than that, we find, in their businesses.
Thanks for that, Sam. The benefit of using professionals often, any professional, is that they have such great insight into a range of different businesses that may be very much like your own, and so being able to partner with a professional like that relieves a lot of pressure, opens up new doors as well. So thank you very much for covering that. Michael Moon, before we get into the details of tax debt, would you like to set the scene a little bit? Tell us about what Tax Assure does and how it assists business owners who do find themselves with ATO debt.
Thanks, Michael, and thanks everybody for coming today. We're a business called Tax Assure. We help businesses of all sizes. Essentially, every one of our clients owes money to the ATO and haven't been able to pay it off either as it accrued or as the ATO would love it, in a lump sum. So specifically what we do is we get in and the ATO, a lot of you probably understand, are quite tough at the moment and going very, very hard, and I'll explain why that is in a little while. But so we get in and firstly stop recovery action. That's never been more important than it is now because the ATO are going hard and they're going fast. The second part of it is we get in and negotiate payment terms with the ATO. I'm sure a lot of you have heard of the thing called an ATO payment plan. There's payment plans and there's payment plans. My grandmother can negotiate a payment plan, but it may not be a good one. So we get in and negotiate payment terms with the ATO that suit the business rather than what the ATO might be insisting upon. So we set up payment terms that may fluctuate with cash flows for businesses, may have ramps because there's issues that have happened within the business that they need a bit of time to rebuild cash and that sort of thing, and we're going to be talking a lot about cash today. The other thing we do is the ATO, as many people will know, charge interest, and that interest is currently 10.61% compounding daily. So that adds up very, very quickly, and most clients we see 20, 30, sometimes 40, and can be up to 80% of the debt is actual interest. Now, the ATO charge that because they're trying to create a level playing field between those businesses that pay their debt and those that don't. The problem is many of the businesses that don't pay it, there are very valid reasons why they haven't done it. So we also go in and make applications. It's called an application for the remission of interest and penalties to get the ATO to remove that interest and penalties. And many of our clients, when we do that, it takes them from a position where maybe the business won't survive to where it can survive if they can bring their ATO debt down by 20 or 30%. So, and then the final thing we're doing, and we're doing a lot of this at the moment, a lot of people put payment plans in place, particularly during COVID, and they may have been a good plan then, or they may have been the one that was thrust upon them by the ATO, but we're going in and renegotiating those payment plans because they're killing cash flow in businesses. We had a company recently that we were working for, and they were an earth-moving company. They were actually selling excess equipment that they were actually going to have to buy back in 12 months' time because they had a big project coming up to fund the ATO payment plan. And that was just going to be a financial disaster for the business. So we went in, renegotiated that. They had a plan, but it was just a terrible one. And we halved their repayments on that. Needless to say, they didn't need to sell any more equipment, and we got them out the other side. So that's what we do. We operate nationally. We've got offices all around the world, all around the country for now. But yeah, we don't lend money. We don't do compliance work. We don't do the work that Murchisons and other accountants do. And in fact, we work very closely with business advisors. Most of our work comes through an accountant or a finance broker or a finance company or a professional advisor. It could be a business coach. It wouldn't matter. We work closely with other advisors. We do our little piece, which is the ATO debt piece, and then we step back. We're a weird business. We hate repeat customers, so we don't ever want to see the businesses again. And if we need to, we'll help them around that in terms of maybe connecting them with the right people to make sure we never see them again. We love seeing our referrers again, but so that's us, and we love helping people. And what gets us out of bed every day is actually helping people, and that's what we're in business for.
Sounds good. We've got a similar approach to our clients. If you're talking to me once, I hope never to have to talk to you ever again.
Yeah, I know. People laugh when we say that, but it's true. I mean, yeah.
Good one. Thanks, Michael. Renati Burrell, you're a finance broker. Tell us a bit more about world-class finance and how you assist business owners to get the right finance in place.
Okay, so World Class Finance is a commercial finance brokerage. We specialise in commercial property, business finance and asset and equipment finance. What we really love to do with our businesses is get to understand not just your numbers, but actually your business, how it operates, what your challenges are, and where you want to go with your business, where you're seeing your growth. What we like to do after that is find you the right finance solution that's going to actually fit in line with where you're trying to go, and that's going to improve your cash flow and support your growth opportunities. So we work with businesses every day. We might take care of someone who needs ATO debt refinanced because they've got a huge ATO debt that they can't manage. We look at helping people with cash flow and finding finance that's going to help you support your cash flow. And the other things we do is we help you plan for growth. So we work with you to understand where you want to go and, how that works.
We're going to go back to Sam. Now, obviously, you've got a lot of experience dealing with businesses of all sizes across various industries. What would you say are some of the most common mistakes that business owners make that can lead to cash flow pressures? What are some of the red flags that business owners should be looking for to avoid these kinds of issues?
I think the most common mistake is probably a lack of a financial process or understanding of where their financial situation sits within their business. So we see a lot of people that come on board as a client or a potential client or someone that needs help. They may not know what their gross margins are that they're making on their product or service. They may not know what their monthly expenses are. They're not getting the right financial information to be able to see what's going on in their business. It's very common in small to medium businesses. They don't have the time to focus on that. We find a lot. Their predominant goal is to go out and sell what they're selling, which as it should be. A larger business has got a full internal financial team that looks after reporting, etc. for them. There's definitely a gap for small medium businesses where sometimes that doesn't get looked after at all. So a lack of forecasting, a lack of reasonableness in forecasting. So not applying sensitivity analysis to what they're projecting, overly optimistic projections of what they're going to do. No factoring in of what might happen in the outside world. We've seen ones in the past where someone will have a forecast that they're going to create a product and all of a sudden everyone in the world will buy this product. You've got to be reasonable with what you're forecasting. I think having a proper month-end process, etc., in their financial department is non-existent in some businesses, which obviously leads to financial information that's not reliable and is not able to be used to make decisions off.
All right, I could talk to you for ages, Sam, but I also want to hear from Michael Moon. Now, I know that when businesses face cash flow pressures, one of the areas they're going to avoid is paying tax debt. We've all read about ballooning ATO debts to things like COVID and bushfires and all sorts of dramas that are out there in the current economic climate. But could you please tell us a little bit more about this? And what is that situation with the ATO Commissioner collecting tax debt at the moment? What would you say? I've heard plenty. I'd like to hear from you.
Yeah, sure, Michael. And obviously we focus on ATO debt and we look at the world of business through the lens of the ATO debt. And look, it is, I sort of do a lot of sort of speaking engagements, and one of the things I say is it's a very, very tough time at the moment to owe money to the Commissioner, to the ATO, because, and I'll explain a little bit about why and how we got there. But essentially it's a numbers game. There is a numbers issue here, and you mentioned COVID, and I think that's a good cut-off point, because if we look at what the overall ATO debt was prior to COVID, and what I'm talking about here is not debt that's in dispute or debt that's part of an insolvency and everything. This is hand on the heart. Businesses say, we owe this money, we just haven't been able to pay it. Now, prior to COVID, that figure was roughly around $26 billion, which sounds a big number, and it is a big number, but to put it into context of where we're at now, and I'm not talking about the big end of town. Two-thirds of this is owed by small business, and that has remained constant throughout. Roll forward to where we are now, and it's $56 billion. So it's more than doubled, and we actually think that number is very conservative, because that's the number that came out 30 June last year. So we've got debt since then, and on top of that, it doesn't include what the Commissioner doesn't know about, i.e. things that haven't been lodged. Now, pretty much every client we see has unlodged BAS, income tax returns, that sort of thing. So we think the number's well in excess of $60 billion. So again, that's a big number. And what that means is two things. There's a lot more businesses out there with ATO debt. And that's one of the things I always try to say when I talk to a business owner. You're not Robinson Crusoe here. There's no shame around this. Businesses have had a very, very tough time over the last few years. But the worst thing you can do is stick your head in the sand and flat the lump that we talked about. Go and get the lump. Well, we'll cut it out. Let's go and get it sorted. And the sooner you do it, you'll sleep better. You'll stop worrying about this sort of thing. But that's the environment we find ourselves. And what that has meant is that we've got a new Commissioner, and there's incredible pressure to do a number of things. Firstly is to get that number down. Now, there's two ways the ATO can bring that number down. They can collect it, or they can write it off. And you might say, well, writing it off's a good thing, but writing it off means winding businesses up. So, of course, they'd like to collect it, collecting takes 2 to 3 years, writing off takes 2 to 3 months. And there is still a priority within the ATO, it's taxpayers' money, to collect the debt. But the main priority is to get that number down. The second thing they want to do, and we talked about, what was happening during COVID, is that a lot of businesses got into bad habits. And in partially because they were doing what the ATO said. Keep lodging, but don't worry about paying. We all thought the sky was falling in with COVID. Keep your cash close just in case we need it. That went on far too long. We were ringing the ATO trying to pay money and they said, no, everything's on hold. But what that meant is that, there's a lot of businesses out there with ATO debt, but our client base hasn't changed dramatically, and we act for businesses with $50,000 in tax debt up to, I think our largest is about $9.5 million, and everything in between. We do a lot of work in that SME space because that's where the problems are. But our average debt that we were dealing with prior to COVID and floods and bushfires and all the things that have been going on was around $400,000. It's now bumping up to the $1 million mark, and we're regularly seeing debts well in excess of $1 million. So that means that there is a real need for these to be addressed, but it also means, and that's where people like Renati come in, a lot of businesses we would put them into a payment plan and pay it out of cash flow. And we're still doing that every day of the week. We would see, every week we'd see at least a dozen businesses, if not more. But there are now a lot more businesses that need cash to get in, and it's part of the reason why the three of us are on this panel together, because you need to get your systems and your processes right, and you need to make sure we're a weird business. We don't like repeat customers. So we don't want to see them again. So we want to make sure that whatever brought them there is fixed, and sometimes they need funding to get out the other side. So, and then there's probably a third thing going on, and there's been the ATO have been seen as a very dormant creditor, and so forth. And there's certainly a message going out to businesses, and these are businesses that don't owe money to the ATO, that we're not an easy source of credit, because people often go, haven't got enough money, we'll just borrow from the ATO. We just won't pay our tax. No applications, no nothing. It's certainly not easy now, because if you do that, your business is heavily at risk. Secondly, it's certainly not a cheap source of credit, because, as I mentioned before, 10.61 compounding daily is a big number. There's a lot cheaper finance out there. It's also, since 30 June, no longer tax deductible, which actually makes that an even more expensive thing. So, there is really a lot going on. The ATO are tougher on payment terms. They're tougher on the removal of the interest that I talked about before. But, there are solutions. But your businesses really need to engage quickly.
Renati, you see a lot of businesses. What would you say are some of the mistakes that businesses are making when seeking finance, or issues that you see with their existing finance structures? You need a microphone.
So one of the main issues I'm finding is more of a cash flow issue. A lot of business owners are not actually planning for the ups and downs of when their business has a dip, or when their customers are paying quite slowly. At the moment, a lot of businesses are suffering from a lot of cash flow problems, and so they're paying their creditors quite slowly. So you'll hear a business say to me, oh, none of my customers are paying, and when I ring them up, they're saying to me, when my clients pay me, I can pay you. So this is a real huge problem at the moment that's going around, is that everyone is paying their debtors quite slowly. Their creditors quite slowly. And
they're all using the same $20 bill.
They are, correct. Yeah. So one of the biggest problems I'm finding is we like to work with businesses to say, look, at the moment, your business has no cash flow problem, and we like to see that, but why don't we plan for, we know it, in June or in July or towards the end of the year, you might have a closure period, and your business might have a dip there, and you won't have money coming in for 2 months. So you need to plan for that, so you can still pay your staff, you can still pay all your debts. So one of the main things I'd like to say, a big mistake is not planning for the quiet periods and the times when you can't actually, your cash flow is looking really, really bad, and you can't actually pay your bills. So if we plan for them, we get the right finance in place when you've actually got a good cash flow position. Then when you don't have a good cash flow position and things have slowed down, you've actually got that money to rely on, and you've already got that funding in place. And I think that's really, really important at the moment. That's one of the main ones. The other probably really big issue we're finding as well is a lot of business owners are getting a lot of they're looking on the internet for their finance at the moment. There's a lot on the internet. You can see it all over there. There's, quick finance, no documentation, money in your account tomorrow. And people are going, wow, this looks fantastic. What they're not understanding is, what am I actually paying for this finance? Is this finance the right kind of finance for what my problem is? So as I said before, if your problem is slow paying customers, that's not really an issue where you don't have money in your business. That's an issue with your cash conversion cycle, how fast the money is coming back into your business. So what can happen there is people will go out and get a quick loan from one of these people on the internet, and they have no idea what they're paying, because a lot of the time the interest rate is not quoted, or it's quoted as a simple interest rather than a annual percentage. They're giving them factor rates instead of a proper interest rate. And you can see some of these loans are well into 55 to 75% interest. And there's no way a business can recover from something like that. I mean, that's way too much. So a lot of these quick loans, even though they look easy, and even though there's smiling faces on the internet and you're seeing loads and loads of these offers, I would steer clear of something like that, and I would actually go speak to a broker and make sure the broker you're speaking to is talking to you about your business, talking to you about what your problems are and how they can help you fix it. Because if they're not asking you the right questions and they're just saying, give me your bank statements, that's not going to get you anywhere, because they really need to understand what the problems are in your business. So I'm actually saying, just please come and see a good broker and have those conversations. And don't be tempted to go online and pick the first loan you can get, because the other problem with that is that a lot of people are going online and applying for a few at a time, and they don't realize that each inquiry form they're filling in is actually an application, and that's actually hitting their credit file. And I've seen a lot of clients coming to me with credit scores of 300 because they've simply done nothing wrong. They've just gone onto the internet and thought they made inquiries, and they've made 4 or 5, but really it's hit their credit file 4 or 5 times, and maybe they've gotten a no from someone, and that's really taken a huge impact on their credit score. And the very last mistake I want to talk about, which is another really big one, is people using finance offered by their EFTPOS card providers. This is a real big problem right now. One of the main issues with something like this is, because the money is given to you pretty quickly and taken out of your EFTPOS machine just as the money comes in from your clients, you don't actually have any visibility on your cash flow. So I might get paid by a customer, but before I even look in my bank account, that money's gone out to pay this loan, because the people providing the finance are the people in charge of your EFTPOS machine. So they've got full control. So what then happens is, if your business slows down and you suddenly have a bad week, you can find yourself unable to pay your staff, the tax department, all the more important people, and your business can grind to a halt or even suffer greatly. So what I would say is, be really, really careful. Yes, these loans will come pretty quickly and be very easy to get, but these people will have access to your EFTPOS machine, and they're the first people who they get to take the first pick. So, you really don't want to do that. You really have no control over something like that. So that's a real dangerous mistake to make. As I would say, come and speak to a good business finance broker, someone who understands your business, and someone who has a wide range of lenders who can take you to the banks, who can take you to all the specialized lenders, not just to the bad end of town at that 55% to 75% range. Because look, as a business, your cash flow is never going to recover from something like that, and we don't want to see you at that insolvency end. They're my 3 mistakes.
Watch out. There's still more to come. Michael, you were talking earlier about the ATO going hard on businesses, and particularly they are in a position to chase people personally for ATO debts. A bit troubling, but that is the reality of the world we are in. Did you have any other suggestions? What should businesses be doing to avoid this situation? If a business does have an ATO debt, what should they be doing in terms of debt recovery? We talked about looking at your business structure, but I think it's all a little bit too late once you've got that debt to start thinking about the the company structures and effective tax minimisation techniques. But what do you have for us, Michael?
Yeah, look, and I think, look, it's certainly, I agree, it's way too late to be talking about structure. But I think, things to take away from today is that, businesses will have ATO debt. I've just explained why we're there and how many businesses out there have it. But I think what I want people to understand is that there is, A, you're not alone. B, there is help out there. But I think the main thing is there's almost always a solution. I think we see a lot of business owners and, they look 10 years older than they actually are because they've been sitting there worrying about their ATO debt for 12, 18 months, and it breaks my heart that it's taken that long for them to find us. But, 97% of the businesses we see, we fix. They don't need to go down an insolvency route. They don't need to go through a small business restructuring because those things really have their own problems attached to it. There will, and there almost always is a solution. I guess two parts of your question. Firstly, in terms of how to avoid getting ATO debt. Well, partially it's what Sam's always been saying. Have visibility of your tax position. Ask your accountant or your bookkeeper, your advisors, what are my tax obligations coming up? They may not get it perfect, but you'll get a really good idea. So you do, and when you know that, when money comes in, you put it in a separate account, that's your tax account. The number of businesses that we see that have a tax account, very, very small. Otherwise, we probably wouldn't see them. So I think that's the thing. But if it does get into that situation where they do have ATO debt, again, it's not the end of the world. That said, I talked about the fact that the ATO are going hard. They're going hard. But most importantly, they're going very, very fast. I used to say to people, you've got 12 to 18 months from a nastily worded letter to they're going to wind the business up. It's not that anymore. We're talking weeks. We've seen a number of businesses where between 4 to 6 weeks they go from you must pay your tax to they've got a winding up application, and along the way they've been received this thing called a director penalty notice, which makes the director personally liable. So it happens very, very quickly. So you need to engage quickly. The other thing I often hear from people is they say, oh, we haven't heard anything from the ATO, so it must be all okay. In the current environment, silence is not your friend. Absolutely not your friend. The ATO's got a lot of automated systems. Things are happening. Just because no one is ringing you or writing to you doesn't mean you're not moving through their system, and then purportedly out of the blue, you get this nasty surprise, be it some sort of legal letter or some sort of enforcement thing where they've garnished your bank account and all the money's gone out of your bank. Or they've reported you to the credit reporting bureau. So you need to move quickly. Coupled with that, you need to engage properly. The ATO require what they call active engagement. Now, rolling back 18 months, 2 years ago, it was enough to be talking to the ATO and maybe even making some payments. But if you're engaging, under the Act, active engagement is in an active payment plan. If you're pregnant or you're not. If you're in a payment plan, you're protected. If you're not, you're not. So you need to, as I said, not only engage quickly, but you need to engage properly. And the ATO have very strict legal practice statements. For those that remember the Little Britain series, Computer Says No, that's the ATO. If you put in an application that they cannot approve, they won't. And so you need to tick every box in the legal practice statements, and that's why it's moved well beyond. We get about 35% of our work from the accounting profession, and they used to say to us, we'd put any old story into the portal, and the ATO would approve it and generally remove the interest. They're now saying, that's not working anymore. They're asking us for all this extra information. They're asking us, all this financial information, non-financial information. How did you get there? Why should we support you? That's all in the legal practice statement, and it's been there for, 10 years. The difference now is the ATO are requiring that, and they weren't requiring that before. So whilst people say the ATO are going harder, in one sense they are on some of the terms, but what they're really doing is saying it's not enough for you to come to us and say, we can pay this debt back and here's our offer. They need to understand, is the business viable? Is the business really going to be able to support those payments? And they're actually interrogating that. And if you don't put the right evidence and in the right form, it's a bit like going and asking for a loan. If you don't give them the right information, Computer Says No. It's the same with the ATO. But look, I think, again, what I want to, people to take away from this is there is almost always a solution. 3% of the time we say to our clients, maybe you need to look at a plan B, and then we can direct them to the right people who do it properly. But that's very rare in our world. So, I say to all those business owners out there, don't worry if you owe money to the ATO, but for God's sake, do something about it.
and there will be a solution. We'll work with you. We might need to bring some funding in. We might need to help you with some of your systems and structures. We don't do that. Most of our clients are good businesses that have had things happen to them. Somebody didn't pay them, or they've had some issue. There's still a lot of debt hanging around from COVID. And from the Commission or the ATO's perspective, COVID ended years ago. But we all know, anybody in business, there's still debts hanging around from there, and there's still impacts from that. And we can explain that to the ATO. They'll still listen, just not as heavily as they would during COVID. But again, there are solutions, but you've got to act quickly and you've got to act properly.
Thank you very much. That is all we've got time for, but it's been a really interesting discussion. Renati Burrell from World Class Finance. A round of applause from our audience there. Michael Moon from Tax Assure. Thank you very much. And Sam Stringer from Murchisons. Thanks very much. Hope you enjoy the rest of the afternoon. More to come for the Western Sydney Expo. Thank you very much.